we're going to add the indicators we'll be using for this scalping strategy. Select this one and add it. Go straight to the settings and replace the 8 with 11 and replace the 15 with 21. Next, delete this and confirm. You have your first indicator placed on the chart, and overall you see it'll give you buy and sell signals. The baseline acts as a moving average that follows the trend. So in a downtrend it'll be pink, and in an uptrend it'll be green. Overall, this indicator gives you scalping signals you can use. To boost this indicator's effectiveness, we're going to add a second indicator. Select this one and add it. We'll go into the settings once more and remove all these things that are unnecessary. Just keep this feature and delete the rest. So you have your second technical indicator on the chart, and overall, you'll see that when the market is bearish, well, the indicator will be red. When the market turns bullish again, the indicator turns green. As you've gathered, we'll combine these two indicators to get some pretty effective scalping signals. I'm on a 5-minute time frame on gold, and I'm going to show you some examples of live trades. We'll let the market run, and we see that here. It gives us a first very interesting sell signal. You see, the baseline was very green here, then starts turning red, briefly turns green again, but it's very slight, and that's why I'm not going to look at this signal. See here, the band is very, very green. Here, it's blurry. And here, we finally have a baseline that turns red again. You have the sell signal given here on this 5-minute candle. So the candle is bearish. That's the second validation we're waiting for. And also, on the bottom indicator, you see we're back to selling. So the market is bearish for both indicators. So we enter exactly here because we'll wait for the bearish signal candle to close. And it does indeed close at this entry price. Put the stop loss on the baseline, and for risk reward, aim for 1.5. We can see that the market reached its target very quickly. If you sell on this candle, in just 15 minutes, your target is reached. You've just made money. We'll let the Japanese candlesticks run on the chart and wait for the next trade. You see that for now, the baseline is very red, very pink, and the market is very bearish. So there, you also have opportunities to sell again. Also on the second indicator, you see it's very red. So for now, we let it be. We wait for the next signal given by this technical indicator. The market is approaching the baseline and it's breaking through it. We just got our buy signal on this small green candle. You see it turning from pink to green. On the indicator at the bottom, we also have the zone turning from red to green. So the market is becoming bullish again. And just like before, you'll enter a buy at the close of the candle that gives the signal. We're placing the second trade, entry price, and for the target, we're aiming for 1.5 times. Let's see if we were right to follow this technical indicator for the second time in a row. We can see that the market has just hit the target. As you can see, we've reached the target here. So that's twice in a row that you've made money with this fairly simple scalping strategy. Now, we're waiting for the third trade, and we see here that the market is giving us a bearish signal. The baseline is turning from green to pink. Here, on the technical indicator, we also have the zone turning from green to red. The market is turning bearish again by breaking below this baseline. And so we're getting back in for a third time on a sell. At the close of this candle, we'll set the stop loss at the highs and the risk reward to 1.5 times, as before. Now, we have to be patient. The trading profession is all about patience. You can see that the market has completely reached its target. We had a slight drawdown here, but very quickly, you see that the technical indicator was right again. First step, we're going to add the technical indicator we'll use for this scalping strategy. You can select this one. We're going to go into the settings to modify it. Here, you put 11, and here you put 1.5. We can change the color to red, and in these settings, you can thicken the lines so they're more visible on the chart. We can also change the symbol. For buy signals, I'll use a green circle, and for sell signals, I'll use a red circle. We can remove this, and remove this. You have the only technical indicator we'll use for this scalping strategy. So you see, we have a green zone when the market is bullish, and a red zone when the market is bearish. We have a middle line here that turns from green to red when a signal, for example, here the technical indicator gives a sell signal. We set the stop loss above the previous highs, and you see the trade offers a risk reward of 1.7. The indicator here gives us a buy signal, stop loss below the wick, and very nice profit potential. In the rest of this video, I'll explain exactly how to buy, why to buy, the signals, timing, stop loss, and how to set your targets. I'm on a 5-minute time frame on Bitcoin, and you can adapt this strategy to all financial markets. I'll let the candlesticks run on the chart, and we'll wait together for the next signal from the technical indicator to break it down and explain it. We stay patient, wait for the signal, and you see that here, the market gave a buy signal. We can see that the technical indicator was red in its zone, red in its line, and now the line is starting to turn green, and the zone is starting to turn green. When the indicator gives the signal, it's on this very, very impulsive bullish candle. We're going to buy, and the right entry timing is to wait for this candlestick to close. That gives an entry price right here. We set the stop loss below this very impulsive bullish candle because we believe if the market returns to this price level, the candle will be invalidated, and we're looking for a risk reward of 1.5. It's a nice first trade, easy to take because there was bullish momentum. We let the candlesticks run and wait for the next signal from the technical indicator. We stay patient. You know that patience is a very important quality for a trader. We can see that the indicator just gave a sell signal here on the red circle. The trend was bullish. The middle line was bullish because it's green, and you see it slowly turning red at the signal, and the green zone is starting to become a red zone. Once the technical indicator gives the signal, we look at the candlestick that triggered it, and you can see it's clearly bearish, so it's validated. We'll sell at the close of this bearish candle that's given the signal on the technical indicator. We place the stop loss at this level and aim for a risk-reward ratio of 1.5. We'll let the candlesticks play out to see if the technical indicator was right for a second time in a row. We have to be patient. You see, the technical indicator is going to give another sell signal, but we won't add to the position since there's also an opposite signal here, a buy signal. We took our sell here, we're sticking to our initial plan and being patient until the market reaches either the target or the stop loss. You can see that the market has reached its target. The technical indicator correctly detected this sell, and we were able to profit from it as patient and professional traders. We'll let the market play out while we wait for the next signal from the technical indicator. You see that here, the market is currently very bearish. All the zones are red, the line is red, and so we wait. Here, we see the market has given us a very interesting buy signal. Because the buy signal, as you see, will occur when the market breaks its small resistance here on the 5-minute chart. So it's some nice price action. Don't hesitate to do a thorough technical analysis when the signal is given to see if it's consistent with the current market structure. You shouldn't blindly follow the indicator. You need to add technical analysis and price action to this technical indicator to increase your chances of success. As usual, we wait for the close of the candle that gives the signal before we buy or sell. Here, we're going to buy, as you've probably guessed, and the entry point is precisely here. We put the stop loss under the low here and look for a risk-reward ratio of 1.5. First step, we add the technical indicator that we'll use for this scalping strategy. Type it in and you can select this one. Go into the settings, keep 70 in this box, and confirm. You have the zero lag technical indicator that gives you buy and sell signals. The signals are very interesting, very effective, and I'm going to teach you how to trade them as simply as possible in this video. You see that here? We have a sell signal on the euro dollar in a 5-minute time frame. Look at what happens next. Overall, this indicator will give you sell signals and buy signals. You can see that you have a green zone and a red zone. Simply put, when the market is rather bullish, the zone will be green. When the market is rather bearish, the zone will be red. And when the indicator thinks it's good to buy or sell, it gives you a precise signal that you can follow. The only rules to follow to track the signal are that the zone must change color. The baseline must change color as well. And the candlestick must be bearish if the signal is bearish, or bullish if the signal is bullish. I'm on the gold chart in a 5-minute time frame. I'm going to show you live how to properly use this very effective indicator. You see that the zero lag indicator just gave a bearish signal. The green zone becomes a red zone. the green baseline becomes a red baseline. And a third condition, when the signal is given, the candle is bearish. So the candle is in the same direction as the signal. When you see that, you sell at the close of the bearish candle that gives the signal. Right here, you set your stop loss at the top of the zero lag zone, and you aim for a risk reward of 1.5 or 2 times. We'll let the market do its thing to see if the indicator was right. So that's a first successful trade. We let the candlestick scroll, and we see that right after, the zero lag indicator gives us a buy signal this time. We can see that the baseline goes from red to green. We can see that the red zone turns into a green zone. And the candle giving the signal is, as you can see, very slightly bullish. But we can take the trade since it's validated. It's not a red candle, so we buy at the close of this 5-minute candle. We set the stop loss at the green zone and look for a risk reward at 2 times. Let's see if we were right to take this buy. And you see that the market has just reached its target. We had to be a little patient. The market was making small candlesticks, but you see that the stop loss was never threatened. The entry price very quickly moved into profit. You just had to be patient for maybe an hour, hour and a half. So that's a second consecutive successful trade by the zero lag technical indicator. You're starting to see that it's simple to use, but incredibly effective. We'll let the candlesticks play out to look for the next trade. We're being patient, and we see a sell signal right here, given by the indicator. You're starting to get the 3 conditions that need to be met. So you have the green zone turning into a red zone, which is the selling zone. You have the signal given here with a red candle, so it's validated. And you also have the baseline switching from green to red. All 3 conditions are met. We'll sell the market at the close of the red candle that gives the signal. Stop loss as usual at the top of the red zone and a risk reward of 2. A 2-to-1 risk reward is great because you might risk $50 to make $100. So even if you lose 2 or 3 trades in a row, with a few winners, you're still profitable. In fact, you only need to win 40 to 50% of your trades to be profitable. The third trade is placed. Let's see if we were right to follow this technical indicator once again. I'll extend the zone and we'll stay patient. Patience is the most important quality for a trader. We can see that the market hit the target for the 3rd time in a row. It took some patience, but you see the price action of a bearish market at work here. And so this indicator is actually quite smart. We'll let the candlesticks play out, and we see that the indicator gives us a 4th trade. We can see the red zone turning into a green zone. The signal is given here. The candle is bullish, so it's validated. And also, the red baseline is turning into a green baseline. We buy at the close of the bullish candle that gives the buy signal. We place the stop loss at the zone level with a 2-to-1 risk reward. We'll be patient until the market hits either the stop loss or the target. You see how effective the indicator is as it hit the target for the 4th time in a row. It's impressive. It rarely misses. So if you maintain a good risk reward of 2 or 3, you're almost certain to be profitable using just this indicator. You just have to follow the signals. In the end, it's actually quite easy to apply. You see that the technical indicator is giving us a sell option here. We can see the zone turning from green to blue and the baseline from green to red. And we can see that on the sell signal, the current candle is indeed bearish and red. So, you get it by now. This is the 5th time I've explained it. We'll wait for the 5-minute candle close. We sell here, put the stop loss at the top of the red zone, and let the market do its thing. 5th trade in a row, guys, and it's a winner thanks to the zero lag technical indicator. You can see here that we had a wick that almost hit the stop loss. But no, the stop loss was saved and the trade is once again a winner. First step, we're going to add the technical indicator. We're going to type it in, select this one, and there you go. It's on the chart. I use this indicator on the 1-minute time frame for gold, but you can use it on any financial market. Next, we're going to set it up the right way. It's set to 100, but we're going to change it to 50. Next, you can adjust the colors to make it more visible on the chart. Do the same thing here and confirm. You can see that this indicator will give you very precise buy and sell signals. First, remember that it's very effective when the market is trending. You can see here a downtrend. You get an excellent trade signaled right at the top for a sell. Same here, trend reversal, a great buy signal given here with a nice profit potential. On the other hand, when the market is flat, when it's not trending, the indicator is less effective. It'll give small buy signals, small sell signals, but those are the signals that are the most misleading. So avoid trading when the market is flat. Now, I'm going to give you some live examples so you can use this indicator in the best way possible. Let's let the Japanese candlesticks play out a bit. And you can see that the market just gave a buy signal following this nice bullish move. We're going to wait for the zone to turn from red to green here, and we'll also wait for the line to switch from red to green. So we'll wait for this candle to close, and we'll simply buy right there. We set the stop loss just below the previous wick, and we're aiming for a risk-reward ratio of 1.5. Here's the first trade. You can see that a few minutes later, the trade is confirmed by the market. We wait and look for a second signal from the technical indicator. As long as the indicator doesn't give a signal, we don't do anything. A trader's job is to be patient. That's 90% of the job, and we just got a sell signal right now. You can see the line changes from green to red, and the green area turns red. So we're gonna sell at the close of this first bearish candle in the red zone. Entry price is here. We set the stop loss just above these small wicks here. And like before, risk reward is 1.5 times. The second trade is placed, and we'll see if the indicator was right. Once again, it's a nice trade. The indicator hit its target. You've just made money for the second time in a row in just a few minutes. As you can see, it's a very simple logic to understand and follow. We're going to let the Japanese candlesticks play out and wait for the next trade. Just a reminder, we're on the 1 minute time frame and this is scalping on gold. The indicator just gave a buy signal. You've got the logic down now. We go from a red line to a green line and from a red zone to a green zone. So we'll buy when the first candle in the zone closes. Entry price, we set the stop loss below the previous wick and look for a risk-reward ratio of 1.5 or 1.6. And you can see that very quickly. In 3 minutes, the market hits the target, and that's a third winning trade for this indicator. Let's let the market run and wait for the next trade. We stay patient, as always. That's a skill you need to develop. You see the market giving you a fourth trade here, this time a short trade. You can see that we had an upward move, formed a double top, and now the market is confirming this signal to the downside. Just like before, we'll only enter a short position when we get the first Japanese candlestick in the red zone. The close of the first Japanese candlestick in the red zone is right here. We set the stop loss just above the last high and aim for a risk-reward ratio of 1.5 or 1.6. The trade is placed. Let's see if the market hits our target for the fourth time in a row. And yes, the market just reached its target for the fourth consecutive time. You can see how, when there's movement in the financial markets, this technical indicator is incredibly effective. First step, we're going to add the indicators we'll use for this scalping strategy. The first one, you select this one. We go into the settings and we'll make a few changes. We delete that. We can delete that too, and we confirm. This technical indicator will give you sell signals, and it will also give you buy signals. Next, we add the second indicator, which will serve as confirmation for the trades. The RSI is added. We're going to go into the settings. You'll see that I use it differently. I don't use a 14 period, but a 21 period. You can also delete that. Here, I like to change the color, put it in white so it's more visible, and we'll make the 50% RSI line more visible on the chart as well. You'll see, we're going to use it for the scalping strategy I'm showing you in this video. You have your two technical indicators on the chart. When the technical indicator gives a sell position, here, for example, I'll check that the market on the RSI is below the 50% zone, which means the market is bearish. If the technical indicator gives a sell signal and the market on the RSI is above the 50% line, I won't take the trade. Conversely, if the technical indicator gives a buy signal, as is the case here, but the market is below the 50% zone on the RSI, I don't take this trade. I'm on gold in the 5-minute time frame, and I'm going to show you some live trade examples. We'll let the candlestick scroll until the indicator gives us a signal. You see here, the technical indicator gives a buy signal. We see that the market was bearish, that the red zone crossed to become a green zone. We have the buy signal, and you can see that on the RSI, we're breaking the 50% zone. The market was bearish, so on the RSI, it was below the 50% zone. And we can see that when the signal is given, when the market gives a bullish price action, the RSI is breaking its 50% zone. So it's validated on both indicators. We can take this buy with confidence. We'll wait for the close of the candle that gives the signal. So that gives an entry price here. You put your stop loss at the level of the buy signal, and for the target, we aim for a risk reward of 1.5 to be profitable. Let's see if the technical indicator was right to give us this buy signal. Once the trade is taken, we wait for the market to go either to the target or the stop loss. We can see that the target has just been reached. We let the candlestick scroll to wait for the second trade. We can see that the market is giving us a sell signal. You see that the zone was green because the market was bullish. Here we have the little crossover and the zone turns red. On the RSI, we can also see that it's breaking the 50% zone to the downside. The market was previously bullish, so you see it on the RSI, prices were above 50. So we have all the signals and criteria met to take this sale with confidence. The candle that gives the signal is this doji. So we have the entry price here. We set the stop loss at the signal level, at the previous highs here. And as before, we look for a risk reward of 1.5. The trade is placed, we let the market run, we stay patient as always and wait for the market to hit either the target or the stop loss. You see here that the market has reached our target. So that's a second successful trade with this technical indicator, which, as you can see, quite effective. We let the candlesticks run until the next signal from the indicator, buy signal given by the technical indicator. We can see the red zone crossing over to become green. We can see on the RSI below that we briefly broke the 50% yellow zone. So the criteria are met to take this trade. The candle given the signal is this nice 5-minute impulsive candle. We wait for the close as always. Entry price. We set the stop loss at the indicator's buy signal level and at the low point here. And we look for a risk reward of 1.5 as before. We'll see if the technical indicator was right a third time in a row. We stay patient, we wait for the stop loss or the target. The target was reached by the market a third time in a row. I'll let the candlesticks run to see the next signal from the technical indicator. We can see here very quickly that after the target, the market gives us a sell. And when the market gives us the sell, you can see on the RSI, we have a small break. So we're moving below the 50% zone. Even if the market here goes slightly back above, at the moment, you have the technical indicator signal, where you have the bearish candle here, the RSI is breaking, so we take the sell precisely here. We set the stop loss above this small wick here, and risk reward of 1.5 as before. Then we stay patient and wait to see if the market reaches the target. You see that the market has shifted sharply downwards, and so the target was very easily reached here.